Hey everyone, Greg Sarnman, Mission Advisory Group, breaking down one of the 12 things that we look at every single morning. And this one is timely because it was how we knew that, along with some other formations and patterns, that there wasn't going to be any contagion from this Chinese Evergrande deal. So as you know, there was a lot of fear over the weekend leading up to Monday the 20th. And then that fear sort of perpetuated itself in the market and through financial media that there was going to be contagion or spillover from the fact that this giant real estate developer in China, Evergrande, was going to default on its debt, and it was going to have a ripple effect across markets. Now, this is going to get into the weeds, so probably only for those of you who are into trading or are DIYers. But I want to give you something that you can look at, that you can add to your list of things that you check. Now, again, we have 12 things that we look at every single morning, and then there's an expanded list of 30, and I'm going to make that available on the website and in print form. But one of the things that's most important is understanding where high yield spreads are. So over in the bond market, the bond market tells you what's happening in equity markets, and it's amazing to me over the years how I've always been surprised that people don't want to learn about fixed income and they don't want to learn about bonds. They don't want to learn about the yield curve and credit and what that tells us about equity markets, because it really informs in advance what is going to happen in equity markets, and what is currently happening. It can confirm that. So there's a thing called high yield option adjusted spread, and in short, what this is going to show you is where spreads are in terms of yield paying out on high yield versus what you might consider the risk-free rate. Now it's a little bit different because they use a treasury spot curve, which I can explain in a different video. But essentially, this is what you want to know. If that spread is growing, if it's gapping out to the upside, then that means that there's risk in markets. And if it's coming in or staying low, that means there's really not a lot of concern in markets. And particularly when it comes to contagion, everything that we're hearing about on Monday, and with markets selling off. Last week, the high yield option adjusted spread didn't even move. I mean, it didn't go anywhere. So HYOAS, high yield option adjusted spread. And I'll tell you where we find it. We go to the St. Louis Fed site. So it's the St. Louis Fed, but they have this site that you can search for, whether you use Google or DuckDuckGo or whatever. But look up Fred and then type in HYOAS, high yield option adjusted spread, and it'll show you that chart. Now, this Fred site has just about every kind of chart you'd want to get for free, and it's also downloadable. And so I'm going to put a link to that on our website. But it's just another tool that you can use, high yield option adjusted spread. Keep track of it, watch to see where it goes, have some fun with it. Go back to March of last year, and you'll see this massive spike. I mean, it just went up to like, it went up to like a 10% spread. You can also go back to 2008 and see what happened then as well. So get some proof of how that particular gauge works. But again, it's one of 12 key things that we look at. It's also part of a list of 30 expanded. I'm going to make those available later. But if you had been watching the high yield option adjusted spread, you would have known that there wasn't significant reason to panic over any sort of contagion in the markets on Monday. So hopefully that helps. Not too technical, and we'll talk to you soon.